Hello everyone. So let's look at the state of the market for next week. Looking at the market now, you can see we have really gone up so high on this uptrend. This is where we are now. So let's analyze this area. Before I said the market is going to come, before we even started to come down here, I said we're expecting the market to come here and to this point, that this is where we will have a reasonable pullback to get in. So when the market got here on our first box, I actually traded twice. But looking at this, we can see that we don't have enough liquidity. We don't have enough liquidity. Here, you can see this volume and this volume, these two volume here. It's quite good volume. But what did it do here? It only absorbed, and it's a reaction from this liquidity around here by the institutional traders. So this liquidity around here in this zone is what also reacted here and here. So the market on Friday was able to break out to make a new high. But we should ask ourselves, is it a good fit for you to buy? Is it a good buy for you? Looking at the market, we can see that this breakout wasn't accompanied by a good volume. You can see the volume is not that big. And what actually will pull down this market is lack of liquidity. It have already set up for a move on the uptrend, but it requires liquidity to continue this move. Now the question is, who will be buying at this upside? Must be people who are amateurs, who doesn't actually understand trading. Let's look at this. You can see where we started. We have gone the first leg up, we accumulated, we went also second leg up and accumulated here, and then the third leg up and then accumulate. So we have gone first, second and third level. So this fourth level should be people who don't understand the market cycle. They are the people, the amateurs, that will rush in, and those people that will rush in won't have enough liquidity to keep this market going up. They won't have that liquidity to keep the market going up, because the market moves with liquidity. The liquidity, that is the money, serves as the fuel for these moves. Looking at this place, let's look at here. When we broke out here after this accumulation in this area, let me draw it. After this accumulation in this area, in this zone, so we broke out on a strong volume, and you see the liquidity started to come in. Buyers stepped in. So once the buyer stepped in here, it is enough to push this market going, to keep it going. So here again, when after this accumulation here, then we broke up here, we broke up here, and seller stepped in, but you see liquidity also came in to keep it pushing, also here to keep it pushing, then it keep going. Now at this level where we are, do you think institutional buyers, do you think big buyers, the institutions, will want to keep chasing this market up at this level after we have gone level 1, level 2, level 3? This is level 4. Do you really think that they won't find it expensive? I don't think so. I believe that the institutional buyers will not want to chase this market up. That is why I always advise people, do not chase up here. I prefer to buy where the institutional buyers have stepped in, such as this area, like I can see here, 1, 2, 3, that actually broke above this moving average. So this area is where I will set my buy-in, which I did twice on TQQ. I did twice on TQQ, that is triple Q, which goes like 3 times leverage of this QQQ. I did it twice, and then I stepped out and then waiting for this to actually pull back, because I still believe we are coming down to this zone here, this 567 zone or 570. Within this box area, this area is what I'm expecting that we're going to come into this area. That is where we have a reasonable pullback for me to step in. And because I have the courage there, you can see the money, you can see the liquidity is there, sitting there, and this liquidity haven't been tapped at all. So if this market continues going up, be careful, it might fail. Be careful, it might fail. If it doesn't have enough liquidity, what will it do? The market will turn back to start looking for liquidity. If it comes down here to look for liquidity, which has been tapped once, twice, and possibly tap it the third time, it might go up a little bit, if not enough liquidity to keep it going. And if buyers don't step in, then we'll see it collapsing down here, where there will be more buyers stepping in because they will see it as a reasonable buy price. So what I'm saying here is be careful, be cautious in this area, because I don't think institutions are willing to buy at this high price. I don't think they want to push this price keep going up from here. If they step in, possibly you will start monitoring, like tomorrow or on Monday when the market opens, monitor the volume to see whether it will break above this moving average. You see here? So you keep monitoring every day by day to see if the volume really is coming from the institutions or is coming from the retailers. If it's coming from the retailers, you will hardly see a break above this moving average. Then you have to be very cautious and careful. That will be all for tonight. Thank you.